Good morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 11th of April 2024. My name is Richard Lee and I made the stockradar.com.au website for you. Well, the market might be levelling off a little bit. We see the Dow come back a bit again last night. A bit of selling evident. The market's gone up an awfully long way, especially overseas, so not to be surprised about that. And that's what happens, markets go up and down, but generally they go up. Look at the long-term picture of the Dow, and it's always on the rise. So, what are our positives this week? Basically, commodities, which are looking a lot better, especially the main three we look at, which is crude, gold, and copper. They're all looking a bit better, so it's giving some of our commodities a bit of a boost. We've seen a couple of stocks come into our top 10, a couple of metals, resource stocks come to our top 10, which is sort of kind of fun. And it's also, the flavour of our market as opposed to the US market where they've got more tech stocks, we've got more resource stocks, so that's why we have a little bit of difference. So with that extra boost, it's probably going to give our market, we'll probably come off today, but we'll give our market a little bit of a support from those stocks. So the 5 and 10 stock portfolios, which we'll look at a bit later on, are also doing very, very well. We've got some good solid stocks in there, some of them in there. So you can see there Goodman Group, James Hardie, Seven Group, Reece, Wesfarmers, they've all done pretty well over the period of time. And they're being really nice to us and our portfolios, and we're making some money there. So a little bit of a boost there, and we'll have a look at the returns a bit later on. But firstly, what we'll do is we'll go to our top 10. And as you can see there, well, Ampol's still at the top 10. Capricorn, Goodman Group, which has been a fantastic performer. Hardie, Viva Group's doing well. Sandfire's come in and jumped really well. Seven Group's been a stable performer. And Brambles is now making new highs again. Genesis is the other one there, and also Reece. So there's a good bit of a mixture there, something for everybody. We've got quite a few stocks in the top, the top trend intensity rating, things that goes from 10 to 7. Lots of stocks in there, so good selection for you to pick from there at the moment. So that's a stock pick count now. We go to the stock pick count, should say. Up 2 again this week to 75. I know I wasn't here last week, so I've had a little bit more of a boost there, but it's just been edging up slowly as new stocks come in, so there's never any hurry. Forget about the FOMO, you don't need to hurry, you won't miss anything. There are plenty of other stocks. As I say, there's only 57 stocks of 156 trending at the moment, so there's plenty more that can come in. So be patient with your stocks, be very careful how you do it, how you handle things, and follow your trade plan to the T, and you will be okay. All right, so that's a stock pick count. So let's go and have a look at the overseas markets, which, as we see the Dow, it's probably got, it's more, it's narrow than the big indexes, so it tends to can be affected by a few stocks a little bit. So we've seen this one come off quite a bit, from just under 40,000 down towards 38,000, which is not a lot in the scheme of things. The rally has been enormous, so we've got to expect some sort of correction at some stage on the Dow, and we can see a little bit of selling is evident here, a bit of froth being blown off the market, which is a good bit of momentum going out of it, sting out of the tail. But as I said before, this rise has been so big. It's sort of nice to have a little bit of an adjustment there, just to bring a little bit of reality back into the markets. And if we look at the S&P and the Nasdaq, there's really not much in this one. There's a bit of selling there, but not a lot. There's not a lot of a dent in the market there, so still holding up pretty well in the S&P, and the Nasdaq is the same as well. It's also really hasn't been affected too much. Again, a bit of selling there, but not affecting the market. So although the Dow's come off a bit, I'm not too worried about it. I know it's a bit of a sentiment thing for us, but reality is the trend is up and things are okay, and they probably will stay okay as we move into this new high territory of these markets. Okay, so our market, as we said before, it's reasonably poised. It will come back a little bit today. It'll be interesting to see if we get a bit of a rebound later on after some initial selling from the overseas markets there from last night. But we're still travelling well. We're above the highs. We're moving higher. There's no real worry there. It's a nice steady rise. It's not overblown. So we're quite comfortable with this rise at the moment. But, again, we are stock specific, so we're watching our specific stock stops. They're the ones we look at. And the index is really just a bit of a guide, a sentiment guide. Okay, so now we'll have a look at the commodities, and gold has been it's had a good whack higher the last few weeks, and you can still going pretty well there. Some of the stocks we hold a couple there: Bellevue, Ramblers, Sandfire, and they're all doing well. We don't need to hold them all because not all of them are moving. Some will, some won't, but it's a dangerous market, and we're always pretty careful there. So we just have a little bit of exposure there, a bit of balance, but not a huge amount. Because we know it can be a pretty dangerous market a lot of the time. So that's not where we make our huge gains. It's more these steady industrial stocks, and we'll see them in our portfolios a bit later on. The ones that return, that give a yield, and also perform in a much more steady behaviour than the notorious minings. Copper. Well, it's at last showing a little bit of life. We get a bit of buying here, some good volume there, starting to rally. So for some of our copper stocks, whether it be Rio, Sandfire, even BHP, it's been a nice bit of support for them. A fair bit of work to get through yet on the copper market, but it is rallying. The volume has been good in this rally, so it looks like it might go higher, above the average, and volume's looking, so momentum's looking okay there, starting to pick up a little bit as we move through this high, which is a very good sign. Crude, again, it's a bit of a slow starter, but it's slowly getting there, bouncing off this S1 area down here around $72. Starting to climb a little bit. We're getting a bit of volume here, some nice green bars here. Not outrageous, but it's moving higher, and that looks good. And some of our oil stocks have responded a little bit there to some of those rallies, to the crude price, so that's good. So that's giving our market a little bit of a boost, which is kind of nice. Okay, so that's the overseas markets. Now I'm going to get into some stocks. When I want to talk about stocks today, I'm talking about in markets there are two types of traders. There are the buy on weakness traders and the momentum traders. Momentum traders find buying on weakness very boring. Buying on weakness traders find momentum trading very dangerous, or they think it's very dangerous. But it's just the way we are. We'll have different profiles. You can make money either way. So I'm going to show you a couple of different stocks here in the momentum area and also in the buy and weakness. So there's something for everybody in this market, and we saw the stock pick count, which I think was 75 out of 157, or I can't remember what it was. Let me just have a quick look at that again. It was 57 of 156, so about a third. So it's not outrageous. It's just been nice for us to get a slow increase rather than a crazy increase. Okay, Ampol has been a great stock, and it's one of the buy on strength, which is a momentum trade. It's broken to new highs. It's moving into blue sky, which is always nice for us. It's come back a little bit. Again, we watch our stop on this, but there's no real worry there. This trend is firmly up. It's above the average. Volume has been very good on the upside, not yet big on the downside. Momentum is very strong, so it's a powerful move. Still rating trend intensity rating of 10. This is as of last week when we hit the highs there. So it's also looking pretty good. A nice little buy momentum trade at the moment for Ampol, and it's probably surprised a few of us in that corner of the world. But as I say, it's performed well, and the trend is nicely up. Okay, then we go to a buy and weakness, which is Orica, which has come from a long way down, but we've had a nice reversal pattern here for Orica, which it's finally broken out of. We had a couple of attempts here, didn't quite get there, but this time we have got there, and we moved ahead nicely. And it's a really pretty picture here because we've got some nice volume down the bottom here. We've got some good momentum. It's above the average. Everything's looking pretty good. So this is one of these ones where buy and weakness, where the weakness turns to strength, and you get this leverage where all of a sudden the sellers have to reverse to become buyers, and you get this market imbalance that causes markets to rise. And it's not until that comes back into balance do we see a bit of a pullback. Anyway, we might get a bit of a pullback today, but again, one day does not make a market. Trend intensity rating is 9. All the indicators are good for Orica, and this trend reversal is quite a large trend reversal here, so that's a pretty good sign. I think it's got a good base under it, and the market looks pretty strong. So Orica's looking okay at the moment. Okay, so now I go to Viva Energy, another energy stock. So we've got a couple there, some of the refiners in there. And again, we had a nice little breakout here, trend intensity rating of 10 on the break to new highs here. Last week, again, like Ampol, had the trend intensity rating of 10. It's nicely above a steady average. The volume here, well, if I sneak this up a little bit, get rid of that big blip, we can see that the volume is actually not bad at the moment. You can see here's some good green bars through here. There's a couple of selling bars there, which is caused a little bit of a pullback, but generally are moving higher in this one here. And again, it's the big picture we look at, which trend intensity rating of 10, above the average, volume's good, momentum's okay. It's strong. It's set it off a little bit there, but seems to have bounced a little bit. But generally, the picture is pretty good for Viva Energy, so we're holding that one there. And again, there are lots of stocks now in the trading centre at the moment for to look at that are moving to new highs. These ones have already done it, but there are other stocks getting ready, moving out of that neutral zone into the trending zone. For us to follow. Okay, next one is a little bit of a buy and weakness one, which is a new listing. We've been through these ones before. We know what happens. The new listings, they have this little rally or pullback, whatever it is, and they go into this sideways trading range as the market tends to try to digest what the stock is doing, and then you get a break either way, maybe up, maybe down. We don't care about down, we care about up because that's where we want to be. And here we have with GQG, it's rallied very strongly. Volume's been very, very good, and it's above the average. It's rallying well, high highs, high lows, and here we buy with a stop loss, and we just lift our stop, which is now into profit. It'll always start at a loss because I'll set it at 15% usually to start with, and then I'll tighten it up as quickly as I can to break even level, and then we start to lock in profit, and we make sure we lock in profit because we keep that stop going above there. So GQG is going to be a profitable trade. How profitable, we don't know yet, but it's still going up, and that's a good thing. So that's a new stock, a good buy and weakness opportunity, this one here. Okay, the next one is Capricorn Metals, which is one of the miners here, which is making new highs. And again, this is a buy and strength trade, a momentum trade. Okay, so here we've got the beautiful volume through here. Momentum's kicking higher, average. So we're seeing this nice little rally here through the highs here. This is an all-time high, which we love. Trend intensity rating is 10. So why wouldn't we buy it? If we've got a stop, which keeps us safe, we know what our risk is. And that's how you've got to play the game. If you're going to trade, you must trade safe, and trade safe means you have to have a stop. You know what your risk is, and make sure you follow it. The biggest problem with anything with trading is discipline. The discipline to take the buy signals, the discipline to take the stop loss signals, and that's where probably the biggest failing that I see across the market of people doing. They think they know better than the market, and they go against their rules. And even the great Jesse Livermore lost a lot of money doing that, and still couldn't do it. So even the experts fail sometimes, but it really is something that you really must try and do the best you can. Have the discipline to follow those rules. Take the signals, new highs. Make sure you've got your stop in place so you know exactly what your risk is, and then you'll have a good sleep at night. Okay, so that's Capricorn Metals. Quite exciting when these stocks move, and some good volume there. So we're looking for some more gains there. And the next one we want to go to, again, this is an interesting stock, and I'm looking at a bit of history here, because it's, this is what stocks do. This is how we sort of trade these stocks. So beautiful reversal down here, high lows here, then resistance here, then we get the beautiful break here. If I just get that down a bit, you can see a bit of volume, not a huge amount of volume, but a good momentum ticked above there, above the average, made a break. Trend intensity was probably about 8 there on the start there. It then had a nice rally, and we came back and we got stopped out of this one, managing our risk, whether it's a big profit or a little profit, we don't care. If a stop goes off, we must get out. So we never know what's going to happen next. It can go down here further, go sideways, or it can go back up again. In this case, it went back up again, and this rally here has been even more rewarding. So don't listen to you. Don't worry about anchor buys, about what's happened before, because things change all the time, and we tend to sort of think about, well, I didn't make a lot of money last time, maybe I won't take this time, but you never can really tell. And Reese has been a good stock ever since it broke above, or just above $20 there. It's now about $28 and holding pretty well up here at the moment. But this was a trend reversal. We got stopped out, bad luck, a new high, we take it, and we rallied again, and we can see some really good volume travelling, supporting this rally, good momentum, good moving average support. So it really has been a very, very nice move. And we now move to new highs, and it's actually holding pretty well in this little sideways pattern here. No great selling. And when I see a market like this, and the sellers don't even really engage, then it's really just a matter of the buyers not being confident enough to push the price higher. Probably because we're in new high territory, people can be a bit reticent. But in the end, you just let your stop loss and you let your signals play out. And we have a stop loss in here for Reese to make sure we're protected in case it does come down. But we're inevitably looking at this little pattern here as a break higher again for Reese. And we are in new high territory here above this level here. So an interesting stock, but it has played out fairly well to our trade plan. And that's what we always follow, and that's what we have to follow. So that is just a couple of stocks there, looking at momentum trade, looking at buy and weakness. There's always stuff out there. Go through the trading centre, look at all the stocks there, whatever you're comfortable with, whatever your stocks in your universe are that you decide. They're the ones that you follow, they're the ones that you do, okay? Just a reminder of some of the stocks that we have really gone gangbusters, because the market is a lot better at the moment. We really shouldn't be worrying about what's happened in the last few years. We look at stocks like Car Group, I mentioned Goodman Group, Magellan Global, which just keeps going higher and higher, amazing everybody. GQG we've looked at, Reliance Worldwide's been another one, and Reese, which we've just looked at there. So some of these stocks really have done very well, and we're combining some good stocks into our Stockradar portfolio at the moment. Okay, so now I just want to go quickly through some portfolio slides for you. Firstly, just having a look at where we're going at the moment. We can see what this is since 2003. Of course, this is our portfolio returns. We have had a tough time for 2 years. This is what markets do. The 5-stock portfolio is the most volatile and the most aggressive, so it goes up higher and come back more. Even though it's come back more than any of the other portfolio, it is still returning 15.8 over this 20-year period, 21-year period. Okay. We have a mid-cap 5-stock, which has also done pretty well. Hasn't come back nearly as much as the top 51, but so it's pretty steady. And then we've got the 10-stock portfolio here, which is always steadier because we've got more stocks in there. Then you can see down here the conservative portfolio and the ASX accumulation index. All of our portfolios outperform that over time. So you just can't really worry too much about this, because this is a fact of life with the market. They do occur. But we're getting a rebound here in our 5-stock portfolio, in our 5-stock mid-cap portfolio, in our 10-stock portfolio, and our conservative portfolio. So the portfolios are back on the move. This is updated to Monday, so we can see how they're going, and it's looking pretty interesting again. And we're getting a little bit excited because the market's been doing pretty well. Again, don't worry too much about it one day or 1 week. Okay, so that's it there. Now, just an example of a member portfolio, a 5-stock member portfolio, and this is a fairly conservative approach that I have. We all like to be on the ones that are running miles ahead, but it's hard to catch those. It's hard to stay in those sometimes. But then even in here, you've got Insurance Australia, which we've been in since June last year. Cochlear, which we've been in since December. 7 Group Holdings since November. Wesfarmers since September. And James Hardie since November. And this has been a fairly steady portfolio, and you can see all the returns over here in the right-hand column as to what we're generating, and that's not bad for a 5-stock portfolio over the last 6 months or so. So although it has been tough, we're coming back and we're fighting back hard, and the portfolios are starting to do pretty well again. I might just mention that I'm also doing a bit of an upgrade to the portfolio service for people. It has been a bit clunky up to now with Google spreadsheets and things like that, but we're now making it much easier to use, and the presentation will basically be an internet page which will have all the information on it there, open positions, returns, all that sort of stuff, and it will be quite nice. So that will be upgraded fairly soon, I hope, for the portfolio members. Okay, so that's really most of what I've got for you today. Portfolio slides. What's happening at Stockradar? Well, as always, we're managing our positions using the structure of the trading centre. It's what it is. The trading centre. It's managing positions. I'll just give you a quick look at it here. This is just one of the groupings here, consumer and commercial services groupings. Okay, so we follow these positions here. We see what our ratings are. We know when we entered, but really the ones that we've entered here, this is really the big column here that we're looking at. This is where the stops are, and this is what we really want to know now. That's the only thing I'm really interested in if I'm in a position. All the returns and all these little comments are all nice to have, but this really is, if a stock goes below this price, then we get out. But that's just the commercial services supply sector, and there's been some great stocks in there, and also a few new stocks have added in there. as well. You know, we've got WiseTech in there now, Xero, Aventia Services, T&E's just come in, so they're looking pretty good, and some of the old stalwarts like Seven Group and Reece. Okay, so with the portfolio service and with stocks and how they behave, it's important that you follow your rules and that you be brave and you be confident in what you do and live in the moment. Don't live in the past. Don't live in the future expecting things. Live in the moment. Take the signals and follow them. Okay, so you can also manage all your positions in a portfolio tab that I have on the website. So it's like having a little mini trading center there. You can have just with your own stocks that you're either in or you're either watching. And you can monitor all the entries and all the stops there in your own page rather than going through the whole trading centre. Okay, so I've mentioned about the upgrades to the portfolio service. So it's a matter of really learning to run with stocks, and be brave, be confident. You got to roll with those stocks that are running. Like I talk about rolling with the market in one of my newsletter a week last month, I think. You've really got to take this momentum. You've really got to go with the market. Let the thing take it with you. It'll tell you when it's had enough. As long as you observe and as long as you watch what's going on. It's important to observe, to analyse, to recognise and then to respond. And often we're too late to take entries, too late to take exits because we don't want things to happen, or we do want things to happen. It's quite hard sometimes to actually say, yes, this is what I've got to do. So as I say, be brave, be confident with your entry signals and with your exit signals, and you will do fine. And I think you know when you go wrong because you don't do the right thing. And that's often what we do. And I talked about discipline before and Jesse Livermore. It's when we go against those rules that we muck up sometimes. So the market and our trading plans often know better than us because we have a little thing up here called emotions, and that's what drives us all a bit crazy and puts us in the wrong direction sometimes. Okay, so that's all I've got for you today. I'm now back in Melbourne. I'm now back in the cold winter. It's cold today. So the summer seems to be over here, but I'm back to work. I'll be back on deck week after week now through the winter time, trying to keep you up to date with the market. And it's sort of exciting what's happening at the moment. So I hope you're all making a little bit of money. And if you're not, come on board, take a trial, look at Stockradar, follow some of their stocks. And if you want to take a portfolio service, that will also help you manage that, as long as you follow all the rules as I give them to you. But that's an exciting place to be at the moment in the stock market. Anyway, okay, that's all I've got for you today. Watch your trends, heed your stops, stay safe, and I will see you all next week. Thanks very much.